UBS Director of Floor Operations, talk more about, I guess, Art, what you're calling resistance somewhere in the 41.75 area, and that's certainly appropriate today.
Yeah, this is a market that is taking its own pulse and taking its own temperature call. It's a little indecisive. You have some mild seasonal patterns, one of which is, and I emphasize the word mild, looking for a possible short-term low in probably Friday, maybe as early as Thursday. So viewers can follow the pattern on the downside. The support is yesterday's low in the S&P, which is 40.80, and immediately thereunder 40.50, which is very critical if it's got to really hold there. And conversely, as they move up, as you said, 41.75, and if wonder of wonders we punch through there, there's more significant resistance at 4,200. In each case, traders will look to see if things like the algorithms kick in. Do these levels work as triggers? Once they're pierced, does that bring in cascade selling or instead short covering? So it's going to be critical, and that's what we're looking at for the next couple of days.
How are you thinking about, Art, this sort of, I guess it's lack of conviction on both sides, right? The bears are thinking about earnings growth risks and economic growth risks. The bulls are hoping for peak inflation and peak Fed. Are you directionally one way or another at this moment?
I'm still concerned about the earnings call. I think you're already seeing the analysts beginning to mark down some of the earnings. And I think you're going to get maybe not target-like surprises, but I think as we get to the end of this month and the beginning of next month, you're going to see companies change their guidance and move it a little bit lower. So I think that's a concern of mine. I do agree that in some cases you may see peak inflation. I mean, Target's a good example. They're overstocked in inventory. What do you do when you have too much inventory? You have a sale, and that means lower prices than you originally intended. So you're going to get some relief in that area, but you're still not getting the supply lines cleaned down. The ships are still waiting in port. As you guys have said again and again today, for example, the cost of diesel fuel is going up. So even if we get those things into port to get them transported to Target or wherever else they're going to sell them, then what we're going to see is higher prices in transport. So inflation is going to be a fact here for a couple of months.
Yeah, you bring up a good point, Art, because I think oftentimes when we hear peak inflation, we think of it almost like a mountain, and there's this tiny little peak, and then from there we'll start to get relief. But based on what you're saying, and if I'm understanding you correctly, we could be in for maybe high level of inflation, maybe lower than what we've seen in recent months, but still very, very high by historical standards for a while to come. Is that right?
Yeah, I think that's going to be it. It's going to be sticky inflation to some degree. The infamous word transitory. Remember, we thought that it would peak out, and then because of freeing up supply chains and other things, that it would come down significantly. It may prove to be so much stickier than that, and I think that's what some of the markets are concerned about. So the stock traders are going to keep an eye on that yield on the 10-year. It's tolerable where it is. If it begins to move higher, up past 305 or something like that, then you're going to see pressure on some of the high tech. So you got a lot of give and take going here, and that includes inflation.
Shepard Smith here. Thanks for watching CNBC on YouTube.